Bismillahirrahmanirrahim. This is in continuation with my previous two YouTube clips. Now we'll be talking about accounting equation and we'll be defining each element of accounting equation. The resource owned by a business are its asset. The right of creditors are debt of a business and are called liabilities. The right of owners are called owner's equity. And the accounting equation is asset is equal to liabilities plus owner's equity, which is called accounting equation. So asset is equal to liabilities plus owner's equity is the accounting equation. So if asset increases, so the resources owned by the business increases. So where that has come from, either it has been uh, it has been financed through a liability, an amount which has been borrowed. The right of the creditors are debt of the organization, जिसको हम उधार भी कहते हैं. And then we have owner's equity, that is the right of owners. This is the amount which owners have invested in the business organization. And now let's describe and illustrate how business transaction can be recorded in terms of result changing in the elements of accounting equation. Okay, a business transaction is an economic event or a condition that directly change the entity's financial condition or its results of operation. So let's take an example. You go to Imtiaz supermarket to buy certain things. When you have purchased those things, what has happened to the operational results of Imtiaz supermarket? Okay, there has been change. They have sold something to you. Okay, they must have made some profit. Similarly, the goods which you have purchased are no more goods of Imtiaz supermarket. They are out of their ownership. It's now your asset. It belongs to you. So a business transaction is an economic event or a condition that directly changes entity financial condition or its results of operation. I hope that's clear. Now let's talk about the accounting transaction. On November 1, 2011, Chris Clark deposited $25,000 in a bank account in the name of Net Solution. So Net Solution is the new organization which is being set up by Chris Clark, and Chris Clark, out of his personal belongings, deposit 25,000 into the cash account of the bank, cash account of this company, bank account of this company. So we can see that cash has increased by 25,000 under the asset, and similarly Chris Clark capital under owner's equity has increased by 25,000. So the left hand side is equal to the right hand side. Now transaction B. On November 5, 2011, Net Solution paid $20,000 for purchase of land as future building site. Now what has happened? Net Solution has purchased the land at a cost of 20,000 and it has been purchased by paying cash. So the cash under B here, under the asset, has decreased by 20,000 minus, and there is a plus sign for land under land. Okay, so what we can see is the total asset, that is cash 5,000, land 20,000, adds up to 25,000. So the left hand side is equal to the right hand side. Similarly, on now talking about transaction C, on November 10, 2011, Net Solution purchased supplies for 1,350 and argued to pay the supplier in near future. Now this means that the purchase is being made on account. Okay, the payment will be made later. So under asset, supply has increased by 1,350, and under liability, accounts payable has increased by 1,350. So there is an addition of 1,350 on both the sides, left and right side. Okay, the liability created by purchasing on account is called account payable. Whenever you buy certain things on account, so that will be called accounts payable. Items such as supplies that will be used in business in future are called prepaid expenses, and these are assets. So okay, now talking about transaction D. On November 18, 2011, Net Solution received cash of $7,500 for providing services to the customer. A business earned money by selling goods and services to its customer, and this amount is called revenue. Okay, now you can see that the cash has increased by 7,500. Now we have total cash of 12,500, and under owner's equity we have a new account which is fee earned. So fee earned has been added. It has been there's an amount 7,500 which is added to fee earned, which in return increases the owner's equity. So on both the sides, left and right, we have added 7,500, which maintains the equality on both the sides. Okay, revenue provide revenue from providing services is recorded as fee earned. Revenue from sales of merchandise is recorded as sales. Other examples of revenue include rent, in which is recorded as rent revenue, and interest, which is recorded as interest revenue. An account receivable is a claim against a customer, which is an asset. When you sell something not on cash, you're selling it on credit. That means you are not receiving anything from your customer, which amount you're going to receive in future. So that is account receivable. Okay, transaction E. During the month, Net Solution spent cash or used up other asset in earning revenue. Asset used in this process of earning revenue are expenses. So on November 30th, 2011, Net Solution paid following expenses: wages $2,125, rent $800, utilities $450, and miscellaneous $275. So let's see what has happened. Your wages, okay, all expenses occur under the head of owner's equity as a negative sign. Why? Because whenever we'll have expense, our owner's equity is going to decrease. So wages expense, okay, that's minus 2,125, rent expense minus 800, utility expense minus 400, miscellaneous 275 minus. And the total of all these minuses has been minus from the cash, that is 3,650. So if we add total amount of cash, supplies, land on the left hand side, which will be equal to the sum of the items on the right hand side. Okay, now on November 30th, Net Solution has paid creditor on account 950. So cash will decrease by 950 and accounts payable will also decrease by 950. So we maintain equality on left and right as well. On November 30th, 2011, Chris Clark determined the cost of supplies on hand at the end of the period was 550. If we remember that the supplies were purchased on 5th of on the 10th of November for 1350. So do you think that this supplies 1350 will remain till the end if the business is running? No, they will be used up, and we are just left with how much? We are left with 550. So what has happened? We have actually used 800 worth of supplies. How do we get it? We get it by from 1350 we minus 800, we minus 550, we get 800. So 800 is the amount which has been used up. So supplies decreases, and so does the supplies expense on the right hand side. On November 30th, 2011, Chris Clark withdrew 2000 from Net Solution for personal use. So cash will decrease and the drawing will also increase in terms of figures, but in terms of minus sign it's going to be minus. So the left hand side is equal to the right hand side. Okay, finally owner's equity, okay, will be equal to owner's investment plus owner's investment minus owner's withdrawal plus revenue minus expenses. So you can solve this question on your own.